Hey everyone, welcome back to Upside Down Data. Today I want to talk about the CPI print that's coming out tomorrow and what we might want to expect based on what it is. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, but a lot of updates, better indicators, and more over there. So if you've been following the markets, you're probably aware that the CPI print for July is coming out tomorrow on August 10th. And what a lot of people are looking for with this CPI print is evidence that inflation might have peaked back in June. You know, we got this really high inflation number on the June CPI, 9.1. But then with gas prices having fallen along with some other commodities, a lot of people are expecting the CPI to start cooling off. And in fact, you can see expectations are somewhere in the ballpark of 8.7. So people are expecting the June CPI to be lower. But really what we're going to want to be watching in terms of how markets react is, do we meet expectation or do we defy expectation in one direction or another? So we can see that in Bitcoin, for example, we've already sold off a bit today, most likely in anticipation of the CPI print, and I expect some volatility to happen following the CPI print, and the direction it'll break will probably really depend on what the CPI print is. I think certainly if we surprise to the upside, that will be bearish and will likely then start moving back down, at least to some degree, some amount to the downside, because again, that would give the Fed, more ammunition to be even more hawkish than they already are or are planning to be if inflation comes out higher than expected. But if alternatively inflation comes out lower than expected, that could be another bullish signal that then could push Bitcoin up to some of these higher levels, possibly up to the 25, even up to 28K range ultimately. And so I think it's really just going to depend on what that print is, because that's going to kind of set the tone for the next month in terms of what do we expect. Do we think that a more or a less hawkish Fed is likely in the future? Now, of course, if we come out exactly at expectation, then a lot of that's probably already priced in. So it's a little bit hard to know what would happen then. I think then you might just get some other factors that might be driving things. So to the extent that Bitcoin or, for example, Ethereum, if we flip over the Ethereum chart, are overextended. And I had actually put out a video recently where I talked about how Ethereum is looking potentially overextended in the short term. And so, if we just got a as expected CPI, it actually wouldn't surprise me to see ETH sell off a bit just based on the pure kind of technicals of it, or just the fact that it is kind of overextended in the short term according to our risk models. But so that's where for me to think that the markets are just going to keep catapulting to the upside, we really defy expectations to the downside. If we get a surprise to the downside on the CPI, that could really launch things further and help, basically kind of negate the fact that ETH is looking overextended in the short term. It might still rally despite that. And, Bitcoin, which is less overextended in the short term, might really be able to put in some work to the upside. But that being said, let's then talk a little bit about inflation and what the markets, might do. I think another thing that's important to watch is that, obviously crypto is not going to react in a vacuum. It's going to, depend a bit on how the stock market reacts as well. And we can see that the stock market has actually, in a lot of ways, been doing a lot better than Bitcoin has. The stock market has been putting in quite an impressive rally, whereas Bitcoin has actually been kind of anemic this entire time. It's really been kind of disappointing. ETH is kind of really the big player in the crypto space that's been making some moves here. But again, that's also because of the narrative around the merge that's going on. And so in some ways, the rallies in crypto have been a little bit maybe underwhelming based on what we might have expected, given this much rallying in the stock market. But just like ETH or some of those others, there's some reason to believe that the stock market might also be kind of short-term, a little bit overextended. So for example, if we pull up the didn't want me to do it the entire way there. We pull up the RSI here, the relative strength index for the S&P 500, for example. We're moving back up into getting closer to that oversold kind of boundary that's classically defined as 70. And we can see that this has acted kind of as resistance in the past. In the March rally going up here, we got up to about the same level of the RSI where we found our top, and then we moved back down. And so there's some reason to believe that we might be starting to get a little bit overextended with the stock market, just based on some of these technical indicators, where again, if there's an excuse to get bearish, if the bears have an excuse to start really flexing their muscles, like a above expected CPI print, or maybe even an at expectation CPI print, would not surprise me to see some short-term downside in the stock market. We can see a similar story with The NASDAQ, which has actually already started to potentially start rolling over here, and also the Dow Jones is telling a relatively similar story. And so again, it's going to be all eyes on that CPI print. And I think it's a little bit hard to predict, the possibility of us breaking expectations of one side or the other, right? I think that's just difficult. I mean, I think the fact that we're going to see a lower CPI print than July is very then June is very reasonable, because again, throughout June, the oil prices were relatively high. That's what I'm showing you here, and have fallen off substantially all the way through July. Oil prices being one of the big drivers of CPI and inflation, not a insignificant part of that, having fallen off pretty substantially. And also, if we just look at commodities more broadly, so I'm just showing you here the Goldman Sachs commodity index, which is just basically a index of a bunch of different commodities and their prices. Again, throughout July, this was pretty much just kind of falling down to this base that we found here. So again, with commodities being another thing that impacts the CPI or commodity prices, these falling off might also suggest that we should see a reduction in inflation like the market expects. But again, how much of a decrease we see is yet to be seen. And so I'm going to be personally watching that CPI print very carefully. And if it is coming out above expectation or even near expectations, I think some downside could very reasonably follow from that. If we surprise to the downside, though, and we get even lower CPI print than people expect, that would then be probably a pretty bullish catalyst that might really start jump-starting assets. So again, if we come out at expectation, I don't really know if it has to fall off. We could just kind of chop around, or who knows, maybe markets will just rally if it comes out at expectation. But certainly a surprise one way or the other, I think, is going to really matter, because I think the market right now, especially the crypto market right now, is just very sensitive. It's very twitchy, and news like that can have an impact. Now, does that mean that we have to go to new lows on, for example, Bitcoin if we got unfavorable CPI print? No, not at all. But what it could mean is that we might actually dip back below something like the 200-week simple moving average, which we just had, reclaimed and held as support. Ideally, we'd like to hold it as support again, but an unfavorable CPI print might take us down and make us have to spend more time down below it, or in fact, maybe even make a new low more realistic. But the 200-week moving average is not the only thing we can look at. So one other indicator I did just want to put up here really quickly is our market direction classifier, or MDC. So this is an indicator that we have here on the channel that tries to classify broader upswings and downswings in the market, or uptrends or downtrends. So basically, if you're above this critical level line, this yellow line that the MDC produces, then that's bullish. And if you're below it, that's bearish. So you can see we had been bearish kind of for the most part ever since really November, was just a little blip up in that rally in March. And then we just went back down to the downside. We did then just flip green again in this more recent kind of relief rally. And we can see that more clearly if I just zoom in from the beginning of 2020 through today. And so the MDC level is, as you can see, it's lower down than the 200-week moving average. So even if we lost the 200-week moving average, the MDC doesn't actually think that that would be a death sentence just yet, or especially worrying yet. We'd want to stay just above its critical level. Now, if we did end up losing the MDC critical level, that's when I would flip a lot more bearish, and then I would think it's quite reasonable, or in some ways likely, we would go on to set new lows, or it would just make it a lot more plausible for us to do that. So as long as we stay above the critical level, obviously new lows aren't incoming because we're above it, but also as long as we stay above it, a bullish bias is reasonable. So I would put the odds of us setting a new lows be quite a bit lower than if we do break below it. Then suddenly those odds become a lot higher. So that's the way I'm going to be evaluating this. So I'm going to be first just watching what the CPI print is, how the markets react. Do we end up losing the 200-week moving average? We lose the 200-week moving average. Do we lose the MDC? If we lose the MDC, then a more bearish scenario becomes focus. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about our indicators and more over there.